Hilla talks taxes. He has been for over 45 years. There isn't a human on the planet with more experience solving problems on behalf of taxpayers. He wants to solve your problem, whether you know you have one or not. So if you do have a tax problem, call the office or visit our website. If you don't have a tax problem, your current tax problem is taxes themselves. So let's get into the policy issues of today. And the main one being Billy Long confirmed as the next IRS commissioner. What are his qualifications? And what is his agenda?
From everything that I can see, he doesn't have any qualifications. Billy Long was a former member of the U.S. House of Representatives. He served 6 terms in the House from 2011 through 2023. At that point, he ran for the U.S. Senate. He lost that election, and so he retired from Congress at that point in time. Long has no background in the financial world, tax or financial industries. He's not an attorney. He's not an accountant. He's not a CPA. He has no tax industry experience whatsoever. He's not been a tax planner. He's not been a tax preparer. He hasn't worked in the problems resolution industry. The question is, why was he selected by the Trump administration?
It begs the question, why?
It goes on. The lack of training in the area of tax law and tax administration is one.
Well, let me ask you this question. Does he have any experience dismantling federal or bloated agencies?
No, because he's never worked for a federal agency. He's never been a secretary of this or commissioner of that or an administrator of this.
In the private sector, does he have any experience dismantling anything in the private sector?
No. Again, the answer is no. What he did in the private sector is he worked in the real estate industry, and he worked as an auctioneer, and he worked as an AM radio talk show host, which it's an honest buck in every one of those areas. But he's got no experience managing an agency the size of the Internal Revenue Service. The IRS is the largest police force in the world. They've got an annual budget of about $12 billion with another roughly $8 billion on top of that in supplemental appropriations. So call it a $20 billion budget. They've got roughly 85,000 employees. This is an agency that touches the lives of virtually every American. And he's got no experience in running this kind of an agency. He's got no experience in dismantling an agency like this. So again, I'll ask the question, why was Long attractive to the Trump administration? And the short answer is I just don't know.
So we don't know what his qualifications are.
You know what his qualifications are. He doesn't have any.
Qualifications are none. We don't know why he got his foot in the door. Do we at least know what his plans are? Do we at least know what his agenda is?
Well, while he was in Congress, Billy Long was a supporter of the Tax Code Termination Act. This was a bill that found its way into Congress repeatedly since 1999, 2000, when the idea was starting to really take root. We need to abolish the IRS and the income tax. The Tax Code Termination Act, largely a ceremonial law that calls on Congress to abolish the Internal Revenue Code, to adopt a tax law that's simpler, that's fairer, that's more efficient, that's more neutral, and that is far, I said simple already, but that's the key, is far simpler in its application and enforcement. So Billy Long, or Representative Long, while he was in Congress, supported that bill, supported the idea of eliminating the current income tax. What attracted Long to the Trump administration?
I think you might be selling our boy William Long short here, because those are 2 qualifications right there. He's sat in Congress, he's been a congressperson, and wants to get rid of the thing that he's been put in charge of. That qualifies him in my book.
Well, that's something, Josh. There's no question about that. But let's understand that the commissioner is not put in place to dismantle an organization. That dismantling can only come through Congress. The Internal Revenue Service is essentially a creation of Congress through the Internal Revenue Code. So that's got to come from the top down. The Treasury Department has the authority to delegate to the Internal Revenue Service the responsibility to enforce the law. But until we get fundamental law changes that can only come through Congress, signed by the president, the commissioner's job is to administer the agency tasked with enforcing the tax code as it's written and as it's on the books right now.
That's all well and good, but he also has the unique position to display to Congress all the different ways that his agency is inefficient, all the different ways this agency could be cut down and all the different ways the agency should just be done away with in the first place. He has this sort of bully pulpit from that position, does he not?
Yes, he does. And that's an important point because up until this point, historically, every single commissioner of Internal Revenue Service of the early 1980s and throughout the 21st century goes before Congress and says, yes, we've got these problems, but all we need to fix these problems is more equipment, more money, and more manpower. Just give us more money, give us more electronic reach into the lives of the American public, and we will be able to fix this problem. There's no question, Josh, that your observation is correct, that Long brings a different perspective to the commissioner's seat. Long could be expected to go to Congress and say, look, we've got this fundamental problem here with the IRS, and it can't be fixed because it's inherent flaw in the system because of the inherent flaws that are built into the Internal Revenue Code and the income tax generally. If he's got the willingness to do that, then that's going to help us down the road with abolishing the Internal Revenue Service. I agree with you in that regard.
There's a chance that the long wait is finally over, pun intended. Where are we at with Trump's big three in the tax cuts? We wanted tip income, overtime pay, and Social Security benefits. And we know the last time we talked, the Senate was still deliberating the big, beautiful bill.
They're still deliberating, and there's been a lot of back and forth between various Senate committees. The only thing we know for sure is the House passed version of the bill. It addresses each of the big three issues that Trump campaigned on. What we've got with respect to tip income and overtime pay is a new deduction proposed in the House bill, and that deduction would be above the line. You don't have to itemize your deductions on Schedule A to get the benefit of it. It's an adjustment to income. Whether you itemize your deductions or not, you'll be able to take advantage of this particular deduction. It's a deduction for 100% of tip income or overtime pay. And so that has to be tip income and overtime pay has to be expressed now in a W-2 form by your employer. Even though it'll show up on the W-2 as income, you'll be able to claim a deduction for that income on your tax return. Now, that is phased out as your income exceeds $160,000, that deduction goes away. High income people are not going to be able to do it. The current proposal in the Senate is to cap that deduction at $25,000. There's no cap in the House bill. The Senate version of the bill would cap that deduction at $25,000. Now, as far as Social Security income is concerned, that's a little bit different. That's treated completely different.
Let me stop you right there. I want to talk about tip income for a second. An absolute bait and switch from the fact that we wanted an exemption and we're getting a deduction. Do you think that it's possible they did that to capture more tip income as taxable? Cash tips are only deductible if you report the cash. So do you think that they're going to try to get more cash tips reported that way?
Let's be clear about this. First of all, it's an above the line deduction. It's really more accurately referred to as an adjustment to income as opposed to a deduction. When it's an adjustment to income, it comes off before your taxable income is calculated. So that does have a dollar for dollar effect as opposed to a deduction on Schedule A, which is only marginal. As far as reporting cash tips, well, you're exactly right. You only get the deduction if you reported the tip in the first place. They're always trying to capture cash income. There's no question about that. That's one of the fundamental flaws of an income tax system. It requires the individual to report all of their income from whatever source derived, whether it's in cash, check, Bitcoin, PayPal. It's got to be reported on the tax return. One of the things that drives IRS enforcement crazy and has since day one is capturing the cash, what you might call the underground economy. How do you capture that if people are not willing to put it on their tax return in the first place? And that, of course, becomes a problem.
So, like we say here, fan of tax cuts wherever we can get them, but this definitely feels like a bait and switch, another method for them to capture more cash income. That's what it feels like to me.
And it's even worse when it comes to the Social Security issue, because remember that candidate Trump campaigned on the idea of eliminating all taxes on Social Security, all taxes on Social Security. What came out of the House of Representatives in the Bill Act is not an exemption from all Social Security tax. Under their proposal, people 65 years of age or older are allowed an additional deduction of $4,000 for an individual or $8,000 for a married filing jointly. Assuming you're receiving Social Security, you get an additional deduction that's available for tax years 2025 through 2028. So the idea is that we're going to take some of the sting out of Social Security income, but it doesn't take all the sting out of it. If you're getting the average Social Security check, it's probably worth about $33,000 a year for most people, and you're getting a $4,000 or $8,000 deduction depending on the situation. And to make that worse, that phases out for so-called high income individuals as well. A single taxpayer earning more than $75,000 a year or married filing jointly earning more than $150,000 a year, it phases out. So they don't get the full benefit either. This falls of the mark that was set by candidate Trump during the campaign. Now that candidate Trump is President Trump, it just doesn't look at all like what he was campaigning for.
The reality is that unless he gutted the tax code and got rid of the income tax, there's no way he would have been able to fulfill the promises that he made on the campaign trail. In reality, those three things and more can be solved by just getting rid of the income tax code in the first place.
You're exactly right. And there's another problem that's an even bigger problem. When you eliminate taxes on this income or that income, or you build in this additional deduction for this or that, what that leads to is less revenue to the government. As far as I'm concerned, the more we reduce revenue to the federal government, the better off everybody is. There's no doubt in my mind about that, morally, constitutionally, and economically. The problem is Congress does not have the fortitude to cut the spending that needs to be cut to prevent massive deficits going forward. National Budget Office is predicting that the one big beautiful bill, the way it's written now, will add between $2.4 and $2.8 trillion to the deficit over the next 10 years. It's a deficit created because they won't adjust the spending to match the revenue. They will not cut the spending, and this is why we've got deficits. This is true with governments and across the board with individuals. I work with individuals across the country that have tax problems created by different reasons. In almost every situation, the problem is not an income problem. The problem is a spending problem. And individuals are taught how to spend money by the example that's set. If the government can just spend money indefinitely, create debt indefinitely, create deficits indefinitely, run the national debt to $34-35 trillion with no ramifications, why can't I do the same thing?
If the government can do it, why can we not?
Well, the difference is that the government doesn't get sued by its creditors. Individuals do. The government doesn't face foreclosure of homes and automobiles. Individuals do.
So the magic A word of accountability.
Exactly.
So
right,
in other
exactly
words,
right.
we need to make it so that Congress actually has to take accountability for these budgets, these spending problems they've created. What do you think about creating a bill? Of course, this would never pass Congress. It would be a bill against themselves. But what do you think about a bill that would immediately make all sitting Congress people not eligible for re-election if there is a deficit in the budget?
Well, you'd have to get the Congress and the senators to go along with
okay.
that.
So the impossibility of that aside.
That's really not the problem. Here's what the problem is. Senators and representatives, elected officials, this is true of the president, every elected official, is already accountable to voters. The voters are responsible for either saying yes or no to a particular candidate. The problem is the profound ignorance of American voters today who do not understand fundamentals of economics, and they do not understand the fundamentals of financing a government. They have no idea what the Constitution authorizes for federal activity, what the Constitution does not authorize. We have a voting public today that is so ignorant, never been more ignorant of these issues that control who you send to Congress. And this is why we get the likes of Ilhan Omar elected to Congress, why you get people like Bernie Sanders and Elizabeth Warren elected to the Senate, why you get these radical leftists elected to the Senate, because people do not understand the fundamentals of economics, of constitutional law, tax policy. They just don't get it. And this is completely antithetical to what the founders envisioned. The founders envisioned an educated electorate who would find the most qualified people among them to send those people to Washington to do their bidding in a responsible, intelligent, and accountable way. And we just don't have that anymore.
What we've got going on here is some kind of horrible financial Ouroboros where the government is setting a bad example for the people, and the people can't tell any better, so they empower the government, which then just sets a further bad example. It sounds like a very bad downward spiral. How are we supposed to deal with that?
The only way to deal with it is through education, and it can't be education in government schools, because it's the education in government schools that's created this ignorance in the first place. We've got to educate our children in an environment that's not poisoned by the government Kool-Aid that they continue to feed these kids. That's what has to happen. This is an education problem. People are profoundly ignorant. There is no other reason how you can explain the fact that Bernie Sanders has been elected to the United States Senate. But the point is, Bernie Sanders has never had a job. He's never created a job. He's never made a payroll in his life. He doesn't understand what it's like to run a business. He's been in government his entire life. And his whole philosophy is that government should take control of every aspect of a person's financial life and every aspect of the businesses and their financial lives that are out there. And that's a Marxist philosophy, Josh. How does this guy keep getting elected? Getting elected to the United States Senate from his state, but he had a fighting chance of being the Democratic nominee for president in 2016 when he was fighting
actually
with
didn't
Hillary.
have just a fighting chance. He got shafted by the powers that be. He's on record at this point admitting, like, yeah, I should have been the nominee, but they decided Hillary's going to get it.
Well, and that may be, and I'm not familiar with the inner machinations of the Democrat National Committee, but the point of the matter is, Josh, he had broad support across the United States, and he himself confesses that he's a socialist. So when you've got a self-professed socialist that's got a fighting chance of being the Democrat nominee for president, you've got an education problem in this country.
Probably a good time to ask about what the factions are in the Senate, given that we have one solid section that is socialist. So what does that mean for the bill?
Well, that's a good question. We got a couple of factions. We got one faction led by Senator Rand Paul that are vehemently opposed to raising the debt ceiling and adding to the national debt. Not only will we get roughly $2.4 to $2.8 trillion of additional debt, but they want to push the debt ceiling another $4 trillion. The debt ceiling is the cap on the spending that limits the Congress's ability to...
They're taking out another $4 trillion credit card.
Yeah, exactly. And so what they're doing is writing themselves another credit card. And the debt ceiling is senseless anyway, because as soon as they come up on the debt ceiling, they just raise it again. We've been having debt ceiling conversations in this country for the last 35 years. These arguments go back to the mid-1980s about whether to raise the debt ceiling or not. Every once in a while, somebody will stand up and say, I'm not voting for an increase in the debt ceiling. Then the threat comes along. If we don't increase the debt ceiling, we got to shut down the government. If we can't shut down the government, who's going to be responsible for shutting down the government? It's irresponsible to shut down the government. What's irresponsible is to bind our children and grandchildren to this hopeless debt that has been amassed here. We're talking about roughly $34 trillion in debt. How's that going to be addressed? You can't ever fix that problem if you don't recognize the limitations on spending, which they won't do.
The first step is admitting you have a problem, and they will just not admit that there is a problem. As long as I've been alive, I remember this same song and dance. Raise the debt ceiling, shut down the government. Raise the debt ceiling, shut down the government. And it's gone. Why don't you just reboot, unplug the government, give it a solid 4 years, and then try to replug it back in and see what happens?
Well, okay, fine, but the United States government cannot default on the debt, Josh. That's a fact.
Said, well, there was a story about $1 trillion coin that they were going to mint to pay off the debt. Is that a meme or is that a real thing?
No, it's got to be a meme. I haven't heard any such thing, but they can print money to pay off the debt. You print $34 trillion worth of spending power and pump that into the economy. And I'll promise you this, a loaf of bread will be $340.
Yeah. I agree. So what's the
Now,
salt situation? The state and local taxes are a significant point for the House, but is the Senate going to take it as seriously as the House is?
Okay, the SALT deduction is the deduction for state and local taxes. What has happened here now is bill proposes to increase the SALT limitation from $10,000 up to $40,000. It would increase your ability to write off your state and local taxes. However, that also is capped for high income people. Anybody with incomes over $500,000, that phases down from $40,000 back to $10,000. So there is that situation.
But the real question is the Senate going to take that provision seriously or do something differently about it?
Well, I think they're going to leave it the way it is. That's my sense. There are no Republican senators from the high tax blue states. Minnesota's got 2 Democrat senators. New York's got 2 Democrat senators. Massachusetts got 2 Democrat senators. California's got 2 Democrat senators. These are the blue tax states that are really fighting hard for their SALT deduction. I don't believe that Republicans are going to die on the hill of the SALT deduction because it just doesn't impact most of them. Now, that said, there's an awful lot of Republican representatives from blue tax states, right? That's why it came out of the House the way it did with this 40,000.
The blue senators are going to care as much as a red senator would about the SALT deductions.
The blue senators are more invested in the SALT cap than the red senators. There's no doubt about that. The blue senators want this SALT cap increased. So if anything, it's going to go up from the 40,000, not down.
That answers that question, but the real question is why. That is uncharacteristic for them to want some kind of tax deduction, isn't it?
Here's the irony of it. It's a tax deduction for the rich. There is no question about it. It is a tax break for the rich. It is only about the top probably 15% of income earners that take advantage of the itemized deduction for state and local taxes. High income people have high state and local taxes because they pay high income taxes because of their high income. They pay high real estate taxes because of their affluent lifestyle. Low income people don't pay high state income taxes. Low income people don't have high real estate tax expenses. It's the high income people do. So this is the irony of the thing. It's only the top income earners that benefit from this. And yet these blue state senators are adamant, doggone it, we got to have this deduction in the tax code. By definition, it's tax cuts for the rich.
So if you want lower taxes, period, stop voting for Democrats. But if you want tax cuts for the rich specifically, is this why we see all of these rich corporations and rich people sending so much money to Democrats?
It begs the question why the high income people support Democrats, Josh. It doesn't make sense. There's psychological things behind it. I don't know what drives it, but it's certainly not in their best interest because the fact of the matter is, particularly the far left Marxist Democrats, they want to confiscate the wealth of America from private parties and put it into the hands of the government. That's what Marxism is. The total government control of the 3 essential elements of every economy, which is production, distribution, and exchange. Those are the 3 things that make an economy run. Under the Marxist model, the state takes control of all 3 of those things. There is no such thing as private wealth, private business, any kind of private enterprise. The distribution of products and services is controlled by the state, and the exchange of products and services is controlled by the state in the form of price controls and limitations on product availability. That's what happens under a Marxist government. Production, distribution, exchange, all controlled by the state. And that's what these Marxists want. And why do high income people support that? It's beyond me.
Because it's probably right now because they have this idea that if they can get in the pockets of the people in government, then they can get special tax breaks and special interests. Kickback.
Here's the irony, though. If the Marxist model prevails, you won't need any tax breaks because you won't have any income.
That's a solid point to end on. So I guess that's all for this week. Thanks for watching, taxpayers. And remember, there is no such thing as a hopeless tax case. If you think yours is the exception, then call the office or visit our website, TaxHelpOnline.com. To get a hold of Dan here, he can help you see the daylight.
Follow me at Pillow Talks Taxes. I'm primarily on TikTok, Facebook, Truth Social, and YouTube. Make sure you like, subscribe, and share these videos, especially with your federal and state representatives. And if you've got a tax problem, go to my website, TaxHelpOnline.com. Buy any book off my website at any price point, and you get a free 15-minute consultation directly and personally with me.